So here's a question that traders, investors, and tech nerds have been obsessed with for decades. Can a machine actually outsmart the stock market? Well, back in 2017, a university thesis decided to tackle this head-on. It's a deep dive into chaos, patterns, and maybe, just maybe, the future of finance. Let's get into it.
At the heart of this whole thing is this one really powerful question. When you look at those jagged, unpredictable lines on a financial chart, are you just seeing pure, random noise? Or is there a signal buried in there somewhere? A pattern that a machine could learn to spot, even if our human eyes can't?
And this is the world we're diving into. The foreign exchange market. You probably know it as FOREX. It's this massive global marketplace where currencies are traded. And you can see right here, it looks like a chaotic, non-stop digital ocean of prices going up and down. The challenge is pretty obvious.
To really get a sense of the stakes, all you need to do is look at this number. According to a report cited in the thesis, back in 2013, the daily trading volume in the Forex market was nearly $4 trillion every single day. So yeah, finding an edge in this market isn't just some academic puzzle. It's the hunt for the biggest prize in finance.
And that right there is the core problem, isn't it? It's been the quest for generations of traders to build some kind of system, any system, that can reliably pull out profitable signals from all that noise and chaos. So how have they traditionally tried to do it?
Okay, so let's start with the traditional approach. Before we can even talk about the AI, we've got to understand the tools it was designed to improve on. This is what you might call the classic trader's toolkit.
The whole foundation of this toolkit is something called technical analysis. The core idea is actually pretty simple. You ignore the news, you ignore the economic reports, and you focus only on the chart. The belief is that everything you need to know is already reflected in the price, and that history tends to repeat itself in patterns you can spot.
So what are these technical traders actually looking at? Well, one of the most basic tools in the box is the simple moving average, or SMA. You can see it on the chart. It's that smooth line that kind of flows through all the choppy price bars. Its job is just to average out the price over time, helping a trader tune out the short-term noise and see the bigger underlying trend.
Next up, we've got the Parabolic SAR. See those little dots that appear above and below the price candles? The name pretty much says it all: stop and reverse. It's designed to try and pinpoint the exact moment a trend might be running out of gas and getting ready to flip the other way. And the third tool in our kit is the Relative Strength Index, the RSI. That's the squiggly line in the window below the main chart. Think of it like a speedometer for the market. It measures momentum, how fast the price is moving. It helps traders get a feel for whether a market is overbought because it went up too fast or oversold because it dropped too quickly. Now, here's where it gets really cool. The researcher didn't just use these tools separately, they combined them into one single automated strategy. Think of it like a checklist. To get a buy signal, all three indicators had to line up and agree the trend was up. The RSI had to show upward momentum, the price had to be above its average, and the SAR had to give the green light. The exact opposite was true for a sell signal, and the exit rule was super simple: get out as soon as that parabolic SAR flips. This is our baseline, the classic rules-based trading machine. But this whole experiment wasn't just about testing a classic strategy, right? It was about putting that strategy up against a new contender, a modern challenger, built with artificial intelligence.
The type of AI they used here is an artificial neural network, or ANN for short. And just like the name suggests, these are computing systems that are literally inspired by the way our own brains are wired. They're designed to learn from data, kind of like how we learn from experience.
And this slide just nails the concept. On the left, you've got a biological neuron from your brain. On the right, it's artificial twin. Data comes in, it gets processed, and a signal goes out. It's the same basic idea. Now, connect thousands or millions of these artificial neurons together, and you have a network that can learn to recognize some seriously complex patterns.
So, what did this specific AI's brain actually look like? Let's break it down. It had 4 inputs. Basically, it looked at 4 key pieces of information for every single trade. Was it a buy or a sell? What was the entry price? And what were the values of the SMA and RSI at that exact moment? All that info then got crunched through 2 hidden layers of neurons that looked for hidden connections. And all of that work led to just one single output, a prediction of what the final account balance would be after that trade.
Okay, so this is a really crucial point. The AI wasn't inventing its own trades out of thin air. Its job was to be a smart filter.
It analyzed all the trades that the classic rules-based strategy made, and then tried to learn how to predict which of those trades would end up being winners and which would be losers. The whole idea was to use the AI to make the original strategy even better.
All right, so now we have our two competitors, the classic automated strategy and the AI-powered smart filter. So let's see how the researcher put them to the test in a pretty rigorous 2-year simulation.
So here's how it all went down. The experiment ran on historical data from the start of 2015 to the start of 2017. For 2 full years of market data, the classic strategy just did its thing, executing trades automatically based on its rules. But, and this is the key part, after every single trade, the AI was fed the data. It saw the inputs, and it saw the final result, allowing it to learn and adapt and get smarter over time. And this wasn't some casual test either. The strategy was put through its paces on the US dollar versus the Japanese yen across 4 different time frames, from 15-minute charts all the way up to 4-hour charts. They started with a virtual $100,000 deposit, all running on the professional-grade Metatrader 4 platform. This was the real deal.
This slide gives you a great peek under the hood of the simulation. You can see the indicators right there on the chart, and those dotted lines? Those are the actual trades being placed by the system, the buys and the sells, executed with perfect precision according to the rules we talked about. This is the raw data that the AI had to learn from.
All right, so after 2 years of simulated trading, thousands of trades, thousands of data points, it was time for the final verdict. Was the AI smart filter actually able to beat the simple, rules-based system it was supposed to improve? Well, the conclusion was pretty surprising.
You know, the expectation was pretty clear. The AI would learn to filter out the bad trades, let the good ones run, and boost the overall profits. But the reality was different. The thesis concluded that this particular AI model just wasn't powerful enough to actually improve the strategy's performance. It couldn't find that hidden pattern in the noise.
And you don't have to take my word for it. Here is the final word straight from the thesis itself. Artificial neural networks with feed-forward structures are not sufficient to achieve satisfactory results. In other words, this type of simple AI where data just flows one way through the network just wasn't up to the task. That is a clear, powerful finding.
But it's so important to understand this. This was not a failure of AI. It was actually a successful experiment that gave us a crucial scientific finding. It showed us that financial markets aren't just complicated. They're what scientists call a low signal-to-noise environment. There's just so much random movement that finding a true, repeatable pattern is incredibly difficult. This simple AI was like bringing a basic calculator to a quantum physics problem. And all of that leaves us with this final, really fascinating question. If this experiment shows us that AI isn't some crystal ball that can just predict the future, then what is its role? Is it a tool for managing risk? For analyzing massive amounts of data way faster than any human ever could? Or is it for building much more complex models to take on this challenge? This thesis didn't give us the final answer, but it did a brilliant job of showing us the true, massive scale of the problem.